Welcome back, everyone. Ready for another deep dive?
Always. What are we digging into today?
Today, we're tackling the commodities market. It's been especially buzzy since that Fed rate cut, right?
Definitely a hot topic. Everyone wants to know what it means for their investments.
Exactly. And luckily, we've got a fresh Wells Fargo report to help us unpack it all.
Oh, the Commodities Fundamental Breakdown. I was just digging into that. Came out just the other day, September 19th.
You got it. And one thing jumped out right away. This idea that a soft landing could be a feast for commodities.
Yeah, that caught my eye too.
So for those who haven't memorized every economics textbook ever written, what exactly is a soft landing? And why is it good news for things like oil, gold, and wheat?
Okay, so imagine a soft landing as like the economy gently tapping the brakes. It slows down enough to cool inflation, but it doesn't slam into a recession.
Got it, so no screeching halt.
Exactly. And here's why it's good for commodities. Interest rates usually go down during a soft landing, making it cheaper to hold those commodities. But at the same time, demand stays relatively strong because the economy is still chugging along.
So it's like having your cake and eating it too.
Kind of lower costs and people still eager to buy.
Music to an investor's ears. And the report even draws a parallel to the soft landing of 1995-96, right?
They did. They have this great chart comparing asset performance then and now. Commodities did very well back then.
History rhyming, perhaps. Though the report does stress that we can't just throw money at any commodity.
Right. It's all about being selective. Not all commodities are created equal.
Words to live by, especially when it comes to investing. Now, one area where Wells Fargo seems a tad hesitant is oil, even with the recent price rebound.
Yeah, they point out a few potential downsides. China's economy is still a question mark, which impacts global demand,
Right.
Plus, there are those rumors of OPEC potentially ramping up production next year in 2025.
Yeah, that OPEC decision talk about a potential plot twist.
For sure. And then there's that whole thing with the Brent crude futures curve flattening.
Okay, that one sounds a bit intimidating for our listeners. Break it down for us.
Sure. Imagine the futures curve is like a hill. A steep hill means oil today is cheap compared to oil later, right?
Okay, because everyone's worried about scarcity down the line.
Exactly. But a flat hill, that means the market thinks future supply might be better. You don't need to rush in and pay a premium for oil today.
Interesting. So it's about shifting expectations.
Right. And that impacts how companies make investment decisions, too. If a surplus is on the horizon, maybe they hold back on developing new oil fields.
Makes sense. Do you think maybe OPEC is playing a strategic game here? I mean, they cut production, everyone panics, prices go up. Maybe it's a way to keep those non-OPEC producers in line.
Now, that's a thought. It's like a high-stakes game of chess on a global scale. Fascinating stuff. Speaking of different players, what about metals? The report seems to have very different outlooks for precious versus base metals.
It does. Gold shining bright this year. But some of those base metals, like copper, they're giving off mixed signals.
Yeah, gold's rally makes sense if you think about it. It's the classic safe haven asset. People flock to it when times are uncertain, which they definitely have been lately.
Sure.
And then add in the Fed's recent rate cut, which usually boosts gold prices. It's a recipe for a rally.
A perfect storm, you might say. But Wells Fargo, while bullish on gold overall, does ask what could derail its winning streak. They outlined 4 key factors, in fact. Want to walk us through those?
Absolutely. So the first factor is pretty straightforward. What if, by some miracle, all the geopolitical tensions in the world just vanished?
Oof.
Exactly. The demand for gold as a safe haven would probably take a hit.
Makes sense. What about the other factors?
Well, emerging market central banks have been on a gold buying spree lately. If they decide they've got enough, that would also impact demand. And then there's China, always a big player. If their economy were to suddenly take off and grow faster than expected, it could change the game.
Interesting. How so?
Well, it could reduce that demand for gold from retail investors. They might shift towards riskier assets tied to economic growth.
Ah, so it's all about risk appetite.
Exactly. And the fourth factor is a big one. What if the Fed does a U-turn?
Yeah, it starts raising rates again.
Yep, that would definitely create a headwind for gold.
Got it. So even with the golden ticket, you got to watch out for those speed bumps. But let's shift gears for a minute to those base metals. The report says they got a little sugar rush from the Fed's rate cut, but nothing sustainable.
Yeah, that rate cut gave them a little boost, sure. Boosted investor confidence, gave prices a temporary lift.
Right.
But it's not a long-term solution. The report makes that much clear.
Why is that? What's holding them back?
Well, For starters, we still got those high inventory levels. Too much supply, not enough demand. That puts downward pressure on prices.
Makes sense. Anything else?
And then, of course, there's China again. We've got to keep an eye on their economic recovery. They are massive consumers of commodities, so what happens there has ripple effects everywhere.
True. China's like the elephant in the room. Or maybe the dragon, in this case.
There you go. Great analogy.
Thanks. But speaking of mixed signals, I have to ask about copper. It's the darling of the green technology revolution, right?
Yeah.
But the report seemed cautiously optimistic at best.
Yeah, Wells Fargo is definitely aware of copper's potential, especially long-term. It's essential for renewable energy, electric vehicles, even things like advanced computing.
Right. It's everywhere. So why the hesitation? Why not jump on board the copper train right now?
They call it a delay, not a derailment, when it comes to copper's scarcity pricing. And there are a few reasons for that. One, as we already discussed, is the current economic climate, China's slowdown being a major factor.
Okay, yeah, that makes sense.
What else? The speed of the energy transition matters too. If the adoption of these green technologies is slower than expected, it'll impact copper demand.
So it's a bit of a waiting game then.
For now, yes. But it's a good reminder that investing, especially in commodities, is a long game. You have to zoom out and see the bigger picture.
Absolutely. And this deep dive has been all about seeing that bigger picture. But we've focused a lot on oil and metals. The Wells Fargo report covers other areas too. Anything else catch your eye?
Definitely. They covered a lot, from oversupply concerns with iron ore to what's happening with natural gas, especially in Europe. They're really sensitive to any potential supply disruptions over there.
Right, especially with everything going on.
Exactly. But what I found really interesting was their analysis of the agriculture sector.
Oh, agriculture. People don't usually think wheat when they hear commodities. Tell me more.
Right. But it's fascinating. Agricultural commodities are so sensitive to, well, everything. Weather, global events, you name it. Prices can swing wildly, which is great if you're a trader, but not so much if you're a farmer just trying to, sell your crops.
That's true. So many factors at play.
Right. And the report mentioned these short covering rallies that have been happening in the agriculture markets. Have you heard of those?
Vaguely. Refresh my memory.
So imagine a trader who thinks the price of wheat is going to drop.
Okay.
They short the market, meaning they borrow and sell wheat today, hoping to buy it back later at a lower price and make a profit.
Got it.
But if the price goes up instead, they might panic and buy back the wheat at a loss to avoid even bigger losses.
Yeah.
That rush to buy back, that's a short covering rally.
So it can create these sudden price spikes.
Exactly. It's like a chain reaction. And it's something to watch out for, especially in agriculture. Things can change so quickly.
That's true. This has been eye-opening. It's amazing how connected all these markets are, even ones we don't think about very often, like agriculture.
It really is. And it all comes back to understanding how global events impact our daily lives.
Right. It's not just about making money. It's about understanding the world around us. Couldn't agree more. So much to consider. As we start to wrap up this commodities conversation, are there any big takeaways from the Wells Fargo report that you want to highlight again for the listeners?
I think at the highest level, it's remembering that a soft landing doesn't mean it's a smooth ride for every commodity. Yeah, so be selective, do your research, and be ready to adapt.
Words to live by, for sure.
Absolutely. And, honestly, the biggest thing is to think for yourself. Don't just follow the herd.
Love that. Don't just take someone else's word for it. Look into it, ask the hard questions, make your own decisions.
Exactly.
This has been fantastic. Thanks for diving into the commodities world with us today. It's definitely more complex and more interesting than many people realize.
Couldn't agree more. It touches so many parts of our lives, even if we don't always see those connections.
So true. And for our listeners, thank you for joining us for another deep dive. We hope you found this exploration of the commodities market both insightful and empowering. If you have any thoughts on the Wells Fargo report, your own commodity picks, or anything else on your mind, we want to hear from you. Connect with us on social media and keep the conversation going. Until next time.